Hello, everybody. Thank you all for coming. Thank you, Clint, Sir Winston, all of you out there. We had a historic week, okay? And it's really big. But there's a lot of stuff out there that has people confused. But I'm going to recap all of the crazy moments from this week and share a ton of data like you don't find anywhere else. And let's just go. And thank you again all for coming. So the crypto market cap is just shy of 1.7 trillion, volume 80 billion. Lots of weird things happened between last night and today. We'll talk about that too. Bitcoin is at 43,100 as we speak. Solana alts are on fire, and Ethereum is about 2560. Bitcoin dominance is under 50, and fear and greed is back to 64. So it looks like fear and greed got a little bit of rattle last week. But let's start looking at some numbers. And disclaimer, of course, now this is financial advice. And if you learn something new, hit that like. I see the little love hearts appearing every time you do that. So it makes me feel good too. So Bitcoin monthly returns, despite the historic announcement of a whole bunch of ETFs, we're up 2%, not 3.6%. It changes all the time. 2% for the year. Not bad. Let's look at everything compared to Bitcoin. In strange news, it was Bitcoin's week, but guess what rallied? Ethereum up 15.4%. Solana was down 4%, Binance down 3%, but a lot of other green stuff all across the board. I think also the other ETH chains did very well, like Optimism and Arbitrum, all the layer 2s. They were on fire as well. So, strange week. Let's look at dollar terms. And you can see here, Ethereum up 12.49% to 2,500, while Bitcoin fell 2.5%. And you can see all the other names yourself. So, again, a mixed week. But there is good news at the end of this story. We'll get to that in a minute too. But the big news is having these spot ETFs are huge for the whole crypto space. And that cannot be understated. In fact, the Block Crypto put this out. Morgan Stanley's quote was, "It is a potential paradigm shift in the global view of crypto." You know, when you listen to US politicians, you'll think, "Oh, crypto bad, da 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 da." Hello, Jimmy, I see you out there. But actually, it's not. But this is changing. So we see a lot of understanding now about the dollar status as the world's reserve currency is facing threats. The Chinese yuan and BRICS and all the other good stuff that's happening. But Bitcoin's remarkable adoption worldwide is stunning. Now 100 million people have adopted it. And major companies like Tesla are holding cryptocurrency, and SpaceX and Square and a bunch of other good players as well. So it really is happening. But the fact that the biggest money runners on the planet now have spot ETFs is huge for the space. Now let's talk a little bit about it. I've covered this a little bit during the week, but I think it's important to get to the bottom of what all this money flow means. And it's not just trading volume. So if you look at the tracking of all the volume, ETF volume, big things happened. One, you can see that GBTC was top on the first day, but also on the second day, in fact, even bigger, dominating volume. But what is that volume? And the answer is that volume is heavy, heavy selling. We'll break that down as well. Part of it is because of their fatal mistake of charging 1.5% fee when you have other players charging 0.2%. But the point is, a lot of people thought this was bad, but it's not. Let's break it down. First of all, shout out to James Butterfield from CoinShares. He put together this list, and I cut it in half so it would fill on the slide. And shout out as well to Sanjay for sharing it with me. But James ran the fund flows, and there was 1.2 billion into Bitcoin last week. And remember, not all the data is in yet, because there's a thing called T+1, T+2 settlement, which I'll cover in a minute too. But Grayscale saw $579 million worth of outflows, but for all the others, it was a positive inflow. iShares, Fidelity, ProShares, Bitwise, ARK, VanEck, Invesco, Valkyrie, Takarium 21 shares all had big inflows. And I'll break down one example of exactly what that means. But the point is, big money came in over 2 days. And there was a lot of trading volume, but remember, a lot of that is kind of scalping too, and hedge funds playing, going short one thing, going long the other. So it can be a little bit misleading. But let's talk about the T1 plus T2 real quick. And basically here, this is the redemption under cash orders. and it can take place in a bit of a delayed sequence, typically at the end of every business day. Also, sometimes later than that, depending on when things happen. So GBTC, for example, is T plus 1 or T plus 2 business days. So some of yesterday's outflows actually will not be processed until Monday. So it's crazy to believe we live in a world where we have the technology in crypto to do everything real time, but the TradFi market still works like they did in 1930. It's bizarre, very bizarre. Anyway, the point is we care about the money flowing in because that makes everything go up. Let me explain why. First of all, I did this tweet. I think it was the biggest ever tweet I did. It had 150,000 views in 2 hours, which I can't remember one that has ever been seen so widely, but I broke down kind of what it means with just a BlackRock example. And here, basically, one player in 2 days sucked out 11,500 Bitcoin from the Bitcoin system in just 2 days. Remember, miners kick off 900 Bitcoin a day. This one ETF sucked out nearly 12,000 Bitcoin. And I believe it'll slowly ramp over time. It won't all be in the first 2 days. Gradually and slowly, people will adopt it and allocate towards it. Not much happened on the first day. But that BlackRock move is 13 days of supply. And IBIT only managed 25% of volume. So you could assume that when things really start rocking, we could be doing 46,000 of Bitcoin every 2 days or 23,000 Bitcoin per day, which is 25, 26 times the actual daily production. So it would take 25 days of Bitcoin mining to satisfy just the ETF demand. Just the ETF demand. And that's going to become 56 days in about 92 days because of the Bitcoin halving. It is absolutely insane, everybody. The demand for this thing is going to go through the roof, and there simply will be a supply crunch. We just don't know when. So that's really exciting too. In addition, another very bullish indicator is Jim Cramer. He said this is a major top for Bitcoin, and he's always wrong about everything he says. So that's actually bullish. If he says something's going to go down, it actually goes up. If he says something's going to go up, it'll actually go down. And it's extremely reliable. So I don't know why they still have this PSYOP on TV. Actually, they're all PSYOPs. And that's why nobody watches TV anymore. Because somebody's trying to shove propaganda down your throat that you don't need to listen to. Anyhow, moving on. This is a little map here of the big ETF holders. You can see the big one is Grayscale. 643,000 Bitcoin. That's going to go down gradually over time. Not all at once. It may take years and years. But other ones are going to grow real fast. And it just shows you how small these other funds are. And there's a ton of new ones hitting the market right now. Like the BlackRocks, like the Fidelities, like the Valkyries, like the Franklin Templetons. Big money is flowing. And these aren't just US, but they're global. There's a lot of people in all parts of the world that allocate to these US dollar denominated funds. So don't think it's just America that's pumping into it. Speaking of GBTC, the discount is now at 0.36%. I haven't seen it this low in years and years and years. And again, this means that we're pretty much there. There'll still be more shakeout again because that T+1, T+2 thing I discovered, they don't settle till after the fact. And in fact, BlackRock didn't end up allocating all the cash they had, which they had last night, to Bitcoin until today, this morning, which is stunning. We live in a real-time world, but TradFi is not real-time. But there's some other interesting news coming as well. First of all, sadly, short-term holders are handing their Bitcoin over to the ETFs. This is from Rob Crypto. $4 billion worth of Bitcoin was sent to exchanges at a loss. That's $5 billion in total, about 111,000 Bitcoin. And we're getting closer to Bitcoin capitulation in the space of 2 days. And remember, this type of volume shows you that these short-term sellers are pretty much flushed out of the system, which means now for the ETFs to get Bitcoin, they need to start pulling it from the long-term holder hands. And they're not letting go. So this is actually a very positive sign. Sad for those short-term holders who sold at a loss. That was a bit of a silly thing to do. But again, people get shook out and people believe, we're going to 30,000. No, we're not. Just like we didn't go to 10,000 and 2,500 and 3,000 and everything else. Now, there's another important piece of news as well. Larry, Larry Fink, head of BlackRock, biggest money manager in the world, he has some thoughts around tokenization, which I think I need to share with you. He believes the ETFs are an initial step, and the approval of these will bring out a technological revolution in the financial markets. This is so important because, again, the financial markets are stodgy and slow. They're dinosaurs. And we heard from the Vanguards of the world, etc., that are trying to turn their back on the alpha predator of all, apex predator of all alpha-eating assets. That's Bitcoin. But this is interesting. He believes there will be a change, and tokenization is the next step in the process, according to Fink. And that's the tokenization of every financial asset, whether it be real estate or stocks. Digital tokens on a blockchain will revolutionize how assets are handled, making transactions instant and ownership transfer seamless and also transparent, I hope, too. And the future of financial markets is kind of this ultimate goal where everything will be out there on a blockchain where you can do it instantly. And that is so true, because when you see and understand how these ETFs operate, it's actually kind of terrifying. It's a complete scam. They can bring in a bunch of money on a Thursday and then wait for the Bitcoin price to fall, then deploy that money into Bitcoin on a Saturday morning when Bitcoin's at 42,000 and change, or even less yesterday. So that's the kind of crazy thing that I find about this whole space. But there's other stuff. Now, it's not just India that's adopting crypto and Bitcoin. Not just India, not just the world. It's India, which is the biggest country in the world, over 1.4 billion people. And there was a huge clampdown banning foreign exchanges from operating in the country. But don't worry, the team in India figured it out, and they figure stuff out fast. Thank you so much, Moto. But they are now turning to local exchanges and figuring out the ways of getting crypto, not only to send money, but also to trade and secure their financial freedom. And in fact, guess what country is the most penetrated in crypto on Earth? Yep, it's the purple. Pretty much everybody in India is hard into crypto in a big way compared to other places. Yellow places are a little bit slow. I would argue, though, with Australia. I know the Australians are big into crypto, so I don't know why that is kind of like a yellow. But who knows? Anyway, India and Vietnam, I think, and Nigeria are the 2 or 3 top countries on the planet for crypto adoption because they need it. It's important because the traditional financial system that Larry is referring to doesn't work for them. And humans are clever, and they'll figure stuff out. Anyway, in addition, for a lot of people who had a lot of excitement this week, all the Ethereum holders, big moves as we saw, considering 2023 was terrible for Ethereum. But there's now less than a 50% chance of ETH ETF by May. And that is an opinion from JP Morgan, and they believe it's unlikely that the SEC will approve it by May, but maybe after, maybe sometime this year. We'll see. But I think the good news about that is if they do approve Ethereum, they have to approve other decentralized tokens. So that could be good too. But again, this whole thing will take time, but it's interesting to watch too. Let's look at some of the other layer 1s, layer 2s as well. The deltas this week. The TVL winner for the week is Matic, up 8%. Stablecoin volume, Avalanche. Weekly development commits, Binance. And weekly active developers, Binance. Daily active users, Arbitrum, up 21%. And daily transactions, Near Protocol, up 31%. Those two chains are really rocking lately. And of course, ARB had a beneficial, it's now the leading L2 on Ethereum. So whenever Ethereum rises, you can expect ARB to do the same. There's not much ARB between ARB and Ethereum. Get it? Hope so. Anyway, let's look at the top 50 over the last week and the last 30 days. Very, very mixed thing. And as usual, things that run really hard, really fast, really early tend to lag after, and all the other names kind of run. So if we look at the last week, we see Ethereum Classic, MNT, and ARB were the top 3 performers for the week. And if we look at the bottom performers for the week, Solana and Rune and Binance were at the bottom. In fact, Bitcoin's down there too, believe it or not. So good assets sometimes don't have their day in the sun, and vice versa. Also, over the last 30 days, you can see the winners are Say, ICP, and Arbitrum again. And the losers over the last 30 days are Cardano, Doge, and Rune. So, again, mixed bag hit pause on the screen and you can zoom in and find your favorite tokens there and see how they did. Remember, it's good to look at different time perspectives, like 24 hours, 7 days, 30 days, 3 months, 6 months, a year, year to date. These are all the common time frames that I look at. Now, speaking of money flow, this was stunning. I think over the last 30 days up until last week, the flows out of Ethereum into Solana was about 98% higher than vice versa. This week, however, it has slowed down to just 10% higher out of ETH into Sol. So if you imagine $100 leaving Solana, 110 will go from Ethereum. No, let me get this right. If 110 goes from Ethereum to Solana, $100 will go back from Solana to Ethereum. That's the way to interpret this Sankey chart. And again, it's slowed down because Ethereum had a great week and a lot of money and activity as well on the chain. Let's talk about stocks real quick. Thank you so much for all the likes and support, and thank you all for coming as well, spending your few minutes on a Saturday with me. Stocks, very good week for many, with one big exception. That red little block, Tesla down 7% for the week. It was very bad because they were the first ones to warn that they are being impacted by the Red Sea terrorism attacks from the Houthi group. And again, I'm not political, but these people attack ships and sailors. And of course, the ships now are afraid to go through that Red Sea, so they have to go the long way around the bottom of Africa. And that adds millions and millions of dollars of fuel and about 10 days of time, and that's caused a delay in critical parts for Tesla to operate in Giga Berlin, and that's why the stock is down as well as some other stuff. But earnings are coming soon and that'll all change. You can see tech though was up big, 11.4% Nvidia, nearly 6% of Microsoft, 2% Apple, 5% Google, 6% Meta, 6% Amazon. It's always interesting the way those players, many of them always go up the same percentage every week. Financials are down and energy was down and pharma was up. So that's kind of the lay of the land over the last week. Now let's dig into another big piece of news change. Microsoft, big thank you to AI, became the biggest company on planet Earth. These are the top 10 assets. You can see we knew, because Apple, I've been talking about it for years, they've slowed down in growth, but Microsoft is still growing, and it just completely leapfrogged in market cap, 2.887 trillion versus 2.874 trillion for Apple. And looking down the list though, Meta is next in the box, which will be overtaken by Bitcoin, I reckon, in the next 12 weeks. Watch this space. 12 weeks, maybe 16 weeks. Now, I believed, sometimes my predictions aren't always right. I did believe Tesla would hit 300 by like the 10th of January or something. That didn't happen. Didn't happen because of so much crap and publicity and everything else. But they do have a big earnings call coming up in about 7 days. And the event after the earnings call will be very, very interesting. So I expect some bonkers news. But of course, the media won't like it because the media doesn't like Tesla. Anyway, always being the most hated assets, as I covered a few months ago. Next, Vanguard and miners, a very interesting whole split in the market. You've got Merrill Lynch and Bank of America and Vanguard deciding we're not going to let our customers that park their money with us buy certain things like spot ETFs. Crazy. But then there was a ton of talk that, Vanguard, no, hang on, they have a ton of miners. No. This was a huge part of misunderstanding out there. When you take a deeper look, it reveals that Vanguard's investments in leading Bitcoin mining companies is because it stems from their core strategy of passive index tracking. A lot of their funds track indexes. So if an index, say Russell 2000, the next 2,000 companies after the S&P 500 in the US, have some miners in them and they grow, they have to buy more of the miners. That's why that is. So there's a lot of confusion there. But no, if Vanguard had their druthers and weren't forced to track an index, they would not touch miners because they believe Bitcoin is bad. Like Merrill Lynch, like Bank of America, if you park your money with companies and they dictate what you should invest in, time to go. Now, speaking of miners, they got whacked this week. I put together a little chart for you all. And don't feel bad, everything's down across the board. But this shows you many of these things were close to 52-week highs a couple of weeks ago. Now, many of them are far away from 52-week highs. So Wolf is the furthest away, 58%. So that means the gains to get back to a 52-week high is 138%. HUT, 130% gains back to a 52-week high. Argo, 118. Sphere, 112. Hive, 89%, etc. You can look at the list. The ones that are closest to the 52-week high are DMG and Bitfarms and DigiHost. So I thought that was an interesting little piece of data there. But it's not just, we kind of knew it was just a strange week. But proxies, a lot of people used to own Bitcoin miners as proxies, and I've always said 1,000 times, never own more than 10% in a Bitcoin miner because it's a cutthroat business. Okay? This week we learned why. Very, very important. Because that used to be one of the on-ramps for people to get exposure to Bitcoin. Now they have the ETFs. Therefore, miners are selling off. In addition, miners are selling stock to buy more modern rigs to build up their hash so they can survive post-halving. It's all happening at the same time. And that's what you're witnessing here as well. So for those of you who are kind of, seasick from the miner volatility last week, get used to it. These are call options on the future of a call option on the future. So therefore, they're doubly risky, double more risky than Bitcoin. In addition, MicroStrategy also got smacked. It's a perfect storm of crap happening at the same time. I hedged my MicroStrategy and I got out too early. I covered too fast. It was like, silly. But again, this game is difficult and its timing is everything. And sometimes timing is not perfect. But MicroStrategy does have a fan. And when you look at MicroStrategy, when you look at the amount of Bitcoin on the balance sheet, multiply that by the Bitcoin price, compare that to the MicroStrategy market cap, and you'll see the answer for yourself. Yes, I know they have debt, but it's at 0%. Most of it is 1.2 billion at zero debt until the year 2027. So we'll see. But this is from Bill Miller, who is the son of the famous Bill Miller III. And he said, I think there's actually something out there that's already exposed to Bitcoin, which we've owned for quite a while, which is actually better than a Bitcoin ETF, and that is MicroStrategy. So again, the beauty of MicroStrategy is you can trade. Now, I will be covering a little bit on that for the community tomorrow. And one of the questions is it still worth holding MicroStrategy, and what are the advantages? So that will be coming as well tomorrow. So next, don't forget to subscribe if you want to amplify your intelligence. Now, in other good news for the markets, Bill Ackman, who knows how things work in the bond market, he believes the Fed will move rapidly on interest rate cuts. And right now, with inflation cooling very meaningfully, well, it's kind of weird because 2 days before it actually wasn't, it was going up. But anyway, and I do believe inflation will go up more because of another reason I'll talk about in a second. But anyway, this is his point of view, not mine. He is the head of Pershing Square Capital. And he said he believes the Fed are going to do more than 3 rate cuts, and they're going to do them fast. That'll be great for the market. But let's look at the March, which is the big meeting where we believe the first rate cut will happen, which is really only 2 months away. 2 months and a week, I think. But here you can see now there's a 76% chance of a rate cut happening in March. And it could even be a double. Not 25 basis points, but 50. We'll see. But that's now almost a certainty that we are getting our Q1 rate cut. In addition, there is a lot of signs of economic slowdown out there. And this is shout out to Mike for sharing this. You can see here the trucking sector layoffs are happening. And this historically signals a recession, which is not good for the US market. And there's a little bit more bad news too. Inflation is coming. This is the WCI Shanghai to Rotterdam container freight benchmark rate, 40 foot per box. It's gone up more than twice just in the past couple of weeks, obviously because of the Red Sea. Big problem. But remember, a lot of stuff comes from Asia. A lot of stuff comes on these boats. And when the shipping costs go up like that, you can expect the costs of your furniture or your computers or whatever they're shipping on those boats to go up as well. The price includes shipping. So inflation is coming back, ladies and gentlemen. Plus, with some uncertainty out there as well, oil could go up too, but because the economy is slowing down, maybe not. It's all a complex bag. So with that, everybody, thank you so much. Got to go back and work for the Q&A and prepare that for tomorrow. Thank you as well, T&D Tesla, for supporting us, and Benny, I see you out there, and Anderson W, and Beardy, and all the great team. Appreciate you all for coming. And I'll see you all tomorrow morning. Have a good day. Let me check on the Bitcoin price. Bitcoin, 43,160. Not bad. We're coming back. And remember, it's so scarce. The price can only go up. So a lot of people were so emotionally wrecked last week, but it was also a beautiful buying opportunity yesterday. So, use these opportunities, because you're not going to see $42,000 Bitcoin, sub 42K Bitcoin very often. So when you see that, grab a piece. All right. Thanks, everybody. See you tomorrow.